Gentlemen, and welcome to our last trading day for this week. I'm really happy to have you here in this show. It's our morning briefing show from Admirals. I'm your host, Markus Gabel, with my moderator in the back, Anna. Wonderful good morning, and thanks for opening this session. Let's see what we can do today in our trades. First of all, we stream it on YouTube as well. In the right corner, you will find a button. You can subscribe this channel. You can give us a like if you want, thumb up, or you can leave a comment, by the way. So let's go to the stream and to our, let's see what we can do. First of all, we start every day. Let me fix the technical stuff. So feel free to ask whatever is in your mind. I can see it on YouTube. And good morning to everybody. And here on Zoom as well. It's your show. It's your time. So whatever it is, whatever is in your mind and your heart, then type it in the chat box. Most important thing, we treat each other with deep respect and in a friendly and nicely way, because we are a very lovely community. And all of us, we are here by one reason. We want to make money and we want to be happy. So therefore, it's a good thing to work together and not against each other. Just always work together. I know trading could bring up a lot of emotions, especially if it not works for you and it's annoying and you're angry. But believe me, no one is responsible. No other guy, no other people, no other human being around you is responsible for that, what you are doing in front of your screen. So therefore, sometimes calm down, breath in, breath out, calm down, and then make your mind clear. And then you will figure out it's a good idea to stick to the rules all the time. So Diodon, good morning. And Plamen, Marie-Louise, good morning to everybody. So, and here on YouTube as well, Joachim, wonderful good morning. Bartolome, great greetings wherever you are. So let's see about what we expect today about the upcoming events. The most important appointment today is Vladimir, wonderful good morning, is the US employment report today. So the previous number is 850K and the forecast is around about the same 845. So let's see if this will have an effect on impact to the market. So if you want to have closer information, then please visit this homepage. And here you see the big advantage of having a real account of Admirals. So you can go and log in, then you can get in with your email and your password. And then you see this, and you can go to premium analytics. And here you will find everything you need. So you see more details, you can click on it, and then you have more information here about, and that's really interesting, especially what assets does this event affect. And you know, Eur Usd, especially S&P 500, all these things you are involved in. So, and if you want to have information about Euro, British pound, for example, then you will find these information. You can click on a filter system, high, medium, low, whatever it is. Okay. So, sorry, it's just a little bit noisy. Guys, really? The postman. Okay, so let's go. And I want to invite you to our afternoon show, Trading 101, when big is too big and when small is too small. One of my continuous partners is talking about, and if you have time, feel free to join the session. It's at 3 p.m. German time, by the way. Okay, so, and more than that, follow Admirals Global, please, here on Instagram, if you have an account there, a lot of very, very interesting content. So what do we see in our DAX live trading? I guess we are really, really on track. And you see, we have another trend continuation right now. So here with a really increasing market index. So last night, before I went to bed, I trailed my stop below the last 0.3, because that's the technically correct 0.3. Now we have a little bit higher new 0.3, but just a bit. So you can leave it there. Exactly. And now we have a trend continuation. Look where we went in. That's really interesting. So that was the first, that was a loser here for review of this week, by the way. So we started this week on 3rd August with a loser because we were speculating that the price will go down, and we reached 0.2, by the way, and we sold half the position, and with the rest we got out. So it was more a zero game. So the second one this week was a winner. That was this one here. Let me make it a little bit more clear. Here we go. So there was a first winner. We jumped in, 0.2 partial profit, with the rest in profit out. Next one, and this still running. Here we jumped in again because the rule's still there. We sold at the 0.2, half the profits, and then we trailed the stop. And now look where we are. And this is the big benefit if you learn not to judge the market, not to say, oh, it cannot go higher, oh, I cannot believe it, or something. Just trail the stop and let the market works. And you see, it really works for us. That's really cool. So how should we handle this trade right now? Nothing, just trail the stop. Even you realize we are deep in a green zone, and you know sometimes, yes, the price must go back to the point of control. But as long as you can see the price is going up, why you should intervene into that trade? It makes no sense. So let it go. So maybe we can trail the stop closer the moment we see a bit of whatever, a contrary trend, for example. But you see, actually, prices going up and up and up and up. So let it go for the moment. Nothing to do. I guess we are really on track. And you see, I know there are a lot of groups around there in Europe and in Germany. They are trading the DAX, for example, and they jump in and jump out and drawing trend lines and channels and support and resist and just this, and are very emotionally in judging and in judging the DAX, for example. But if you follow this morning briefing show, then maybe you learned already that is just a product. In the book map, there is no product. There's just only price and volume. No one cares about the product because you trade the price for one future contract. So, and prices rise and fall about 1 point. And that's the volume. In order book, you will never find the reason why, or who is buying or who is selling. It's completely neutral, just only numbers, and numbers are always neutral. So therefore, actually, we have more volume on the buyer side, price is going up. No more, no less. So don't intervene into that trade. So to our hourly chart in Dow Jones, you know, we have two different trends for the moment. So the main trend, by the way, that's really interesting. Even at the end of this week, this trend accompanies us for this week, the whole week. Movement, correction, movements, correction. You see how long a trend can run. Movement, correction. So actually no trend continuation there. and no trend break there. So the market is in an uptrend, and I know what you have in your mind right now. Oh, you can see that's a sideways phase. You see? No, it's not. Show me the sideways phase in the order book. No, there is no trend in the order book, no sideways phase, nothing. So what it is, first of all, it's a trend. And it's a correction right now. And the market is still in a correction in this time frame, in this uptrend. Over and out, no more. And I guess it's a great thing if you learn to have trend eyes, because you don't need more to have trend eyes, and you see where you have to go in and where you have to go out. So, but we can also see that we have a bit of downtrend, and this has a corrective character. So where is the trend continuation? Where was the trend continuation? Trend continuation was there because there was the close below the last 0.2. Last 0.2 was there, which means there was the trend continuation. Then we saw the correction. Here was the first shot where the hit quote realized, because there was the price down to the last 0.2, but without the close, there was no trend continuation. And with this spike to the lower side, that tests the last 0.3 of the uptrend. And now we are still in a correction. And it is possible, and this trend will break at the all-time high. So this is an interesting point at $35,178 by one future contract. So that's the point. So now we have two different trends. And where we are, it's really interesting. It's not that expensive because the point of control is there, 34,583. So it's not really that expensive like the DAX in 10 minutes, far in green zone. That's not, which means we have a lot of space to go up until the price is really expensive in hourly chart in the Dow Jones. So we can expect higher prices. But actually, it's confusing because we have to realize on the trend we can see on the right side of the chart. And this is just a downtrend. So, and if you will see any signals, clear signals, maybe it's a good idea to speculate that the price will go back to the point of control. Because actually now we are a bit in the green zone, but we have more buyers at the moment, or more volume on the buyer side. So wait for the balance candle and then give a little bit space. And you can follow me in the Twitch room, you know, that's a live trading room based on our morning briefing show. There you will see what we do there. Time extended correction, right, Danny? Great, really, it's a time extended correction. It's not a sideways phase. I know this is what you perceive here right now, what you learn online anywhere, but there doesn't exist a sideways phase. What does it express? If a sideways phase, does it express something about the time frame or a trend or whatever it is? No, it leads you in a complete wrong direction. Maybe we talked about this week with range trading. Yes, you can go along on the lower side, can sell on the upper side, but it's more it's a kind of battle between buyers and sellers. So the same volume on both sides. So I have learned, based on my education with my great teachers, not to think in this expression of sideways phase, because either I have a trend or I don't have a trend. And if I have a trend, either I'm in a move or in a correction, no more, no less. So here we have a trend, an uptrend, that's the main trend. And here we are in a time extended correction with the edge of the upper and the lower side. So, and in this correction included is this downtrend. So difficult situation, but we don't have an open trend, which means we have to focus on that signal, what we get on the right side. And this is a downtrend. It has a corrective character, which means we use kind of time trade management from the correction to the 0.2, then make the trade safe and everything is fine. The rest, the market will decide for you. Okay, so let's go to the rest of our hourly chart trades. This is gold. So in gold, we got out yesterday because it was a short. The trend is still valid, as you can see here. And we have a downtrend too right now on the right side of the chart also. So that was the first move, the first correction. Then the second, no, it was a trend break there, I can see. Okay, that's the current trade right now. So this move, correction, and move. So we made this trade here. We made this trade. We lose a little bit money because we cut the possible loss because the main trend is still facing upwards. And you see, we had a stabilization at the point of control. So therefore, it's completely correct to open the trade based on the rules. So, but afterwards, the price decided the volume on the seller side was higher than the volume on the buyer side, which means, okay, it's going down right now. So what do we have right on the right side of the chart? Just a correction of the main trend. The main trend is still facing upwards and has still its own probability that we finally will reach this point 2 here, because this is the point 2. That's the previous point 2, and that's the point 3. So this trend will break here. As long as we have this trend, we have to assume that the price finally will go up. But actually, at the moment, we have this downtrend. And this downtrend is this one. Move, correction, move. Yeah, there was a correction already, and we didn't reach the point 2. So we have to do it again. If we have more higher prices, then maybe a balance candle anywhere there, then we have to go down again to reach the point 2. That's point 3, point 2, and point 2. So just keep an eye on it for gold for today. Then Euro USD. And to be honest, I don't trade Euro USD today. Why is it? Because we expect the unemployment rate today. So therefore, what is it on the right side? Here we go. Move, correction, move, correction, move, and here we are right now in the correction. So you see, the first possibility to go short was yesterday here, roundabout that point. But you see, it was high volatility there in these hours, a couple of balance candles in a row to each other, very close to each other in a row. So, and all those ended at the point 2. So there's no chance to go in. Maybe it's a kind of speculation at the point 2. And basically, I have no problem to speculate or to go in exactly at the point 2 to make a speculation of a trend continuation, but not in the red zone. I can do that in the green zone when I'm on my way back to the point of control, but not when I'm in the red zone in a fair price level. So it makes no sense to do that. The probability is 50-50. I mean, for 50-50, if I want to have 50-50, I can go to the casino, but not in trading, by the way. In trading, you need higher probabilities, okay? So, and then we have oil. And oil offers us a great chance, maybe today. So you see, it was not that bad idea to go out at my trade yesterday. You see, I asked you yesterday, but maybe it was a little bit difficult to trail a possible stop, maybe bar by bar, then we could make more money. But now with this view today, I would say it was not the best, the worst idea to go to close my trade there. Yesterday, it was annoying. You know, you remember our talk yesterday morning. Today, I would say, great. It was a good idea to sell a position there. So you see, don't judge it. Yeah, you have to make a decision right now. So maybe this time it was a good idea. Next time, it's a bad idea. However, follow your plan and everything's fine. So what do we have right now on the right side of the chart? We have a new trend, guys. Look, that's really interesting. We have a new trend. And this is my trend. Lowest point, move. There was a correction in. So let's see the next point too. It was higher high. So movement, correction. And now we are in the move, by the way. So we wait for the next correction. And then, you know, target is also point of control. So I have on my watch list, oil on my watch list for today too. Okay, so there's a question on YouTube. I can see in trend continuation or break, which one is the right? A candle, wick, or body close? Always a body close. Why is that so important for a trend continuation or a trend break? So what do you mean? Type in the chat box if you want. Why do you think is a close, body close, important for a trend break or a trend continuation? What do you think? So type in the chat box if you want. Okay, and I will give you the answer, by the way. Okay, but I want to know what's your opinion about that. Why do we need? Because even my own mentor wrote in his book, it's enough to have a price to have a spike. So if you have a price above the 0.2, a spike, then it's a trend continuation, but it's not. There's no right or false. But if you try to think in a logical way, then you will realize it's not a trend continuation with a spike. And there is a special reason for it. Why is it? What do you think? It's not that easy question. You have to go deeper in your mind with that. So, Alexander, that's unfair. You are in my coaching. You have a big advantage. So, body close indicates that the strongest in the market at the end was the seller. The momentum is higher to continue. Let's see. A spike could be a fake. For me, it is a cycle close. So, interesting. Okay, let's go. While you're doing that, let's have a look at our running trades or closed trades, guys. So we have, you see, US dollar, Canadian dollar. So finally, we had this trend, move, correction, move, correction. So that's the trend. You see, that's the trend, and the big moves here. So by the way, so first of all, we realize we reached a point of control. Everything's fine, final target reached, cool. So, and almost we reached the last 0.3 to have almost a trend break. So this is always not a good sign if you reach the last 0.3. So they will fight on this point. So, and now we realize we have a secondary trend, which is a contrary trend. It's just at the moment, it's just a correction, but we have to work on that. So now I trailed my stop loss yesterday here below where we get out. We made great trade, another great trade, by the way. And then I set a new order in case the red one will continue. And you know, here we go. Here we have our probability of 86% that we come from the last correction accumulation phase to the last 0.2. And this we must use. 86% is high probability. We must use it. Okay, so don't miss it. In case the price will falling down, then you're part of it, or I'm a part of it, by the way. So Morgan's spike is not a commitment between buyers and sellers, but the body. And that's one of the real answers. It is because of the volume. I think spike can occur with a relative small volume. Yeah. And it doesn't matter if you work with normal candles or with balanced candles. It doesn't matter. If you don't have a close above a last 0.2, so just let's see it anywhere, then you can see, then you can realize we work prices, or in general, a price is increasing by volume and is decreasing by volume. So the only component which is responsible for a rising or falling price is the volume. And if you have a spike without a close below the last 0.2 or on a trend break 0.3, then there was not enough volume, because the buyers or sellers tried to figure out if there is enough volume. And if not, then the volume on the other side was higher, which means the prices went down again. So therefore, the volume is responsible if you have a close or not. And as long as you don't have a close, they play a game there. Never forget, the big buyers or the experienced traders always used to buy in the accumulation phase, in the correction zone. And if the price is going up to the 0.2, they are deep in profits, because we have two sides of a medal: buying cheap and selling expensive. And this is the trick or the game what the big buyer is using at the 0.2. So they trick the market out to say, let's make a breakout. And in this breakout, they sell with their volume to go out expensive, to make maximum money. And that's the game on the 0.2. And if you don't have enough volume on the buyer side, then the volume on the seller side is higher, which means you don't have a close above the last 0.2. And this is a great indication that it was not enough volume to continue the trend or to break the trend. It's always just a game at this 0.2 and 3. And if you understand only to think in prices and volume and the game between experienced and unexperienced traders, then you understand, then you understand everything in trading. And then it's not longer a secret. And it's a kind of, it's a kind of freedom to understand that what they are doing there. And then it's a craft. Trend trading is just a craft you can learn by yourself. So that means just a spike, not a close. Just a bit of education topic. So, but I asked the same question to Rüdiger, and he mentioned the spike is allowed to experts to, it's just allowed, yes, but it's not a trend continuation. As I said, there is no right or false, by the way. I know a lot of guys says, yeah, it is a trend continuation. But if you work with a logical thinking, you need volume to continue the trend. And don't forget, it's a trick. Buying cheap and selling expensive. And if you don't have a close, that there was not enough volume. And check in the past, all the time, you have no close above a 0.2. As a consequence, the price is falling down again and goes back in the correction. And that's the point. You have to understand it's just a trick, just a game at the 0.2. Think, and this is what I teach all my clients, think with logic, not what you perceive in trading. Read the chart. My mentor taught me, the moment you start to interpret the market is the moment you will lose money. So we don't have to interpret, we have to read with the candles. And you know, one candle, volume, price, that's all. And then, to be honest, once you realize that and you acknowledge this, then trading becomes very, very boring. And the moment, if trading is boring, it's the moment you become successful in trading. So let's jump through the rest of our trades. Canadian dollar, Swiss franc. By the way, there's no trading idea for the moment. That's Canadian dollar, Swiss franc. Nothing to do. Trend is still running for us. Just trade management. Don't intervene into your trades. Still Canadian dollar, Japanese yen, still the trend, you know, and we are on track back to the point of control. Nothing to do. Euro Australian dollar, it's just working still for us. Also nothing to do. Oh, here we go. Euro British pounds. That's cool, right? As I explained yesterday, we have different time profiles. In another software, my point of control was lower here at this point. So where I decided to go short again. But here you see the price or this market profile is not a part of the rules. The rules are still there based on the probabilities. So look what happened yesterday. We had this trend. You remember? We had this trend. Here we go with move, correction, move, correction. Balance candles, entry, and we reached the point 2. You know, probability 86%. Why you shouldn't trust that system? And you see it works. So we sold half the position, we trailed the stop into profit, and what we have to do right now, first of all, nothing. So just let it go. Another winner, it will never be a loser anymore. Cool, right? In my opinion, it's cool. I love it. Okay. So, and US dollar, Japanese yen, we are still out, and you see it's a good idea, or was a good idea. So for the moment, we have to wait for a new entry, but I guess it's a good idea to wait until the unemployment rate is over this afternoon, because this will have a big effect on the US dollar. So just wait, and for the market too. So there are more. Oh, just a moment. There's another trade we have open, and it's New Zealand dollar, US dollar. So we open the trade based on our rules. So the rules are there. With movement. Oh, here we go. Sorry. Here, move, correction, move, correction. A correction leads us to the last point 2, 38% with the not with the close, with the spike at the moment, but in the first trend arm, it's fine. So we went in here, and actually, yeah, price is kind of stabilizing there. So should I trail my stop loss higher? No. Why not? I tell you, 86% probability that we will reach the point 2. And if I reach the point 2, I'm safe. Then I trail the stop. Then I trail the stop. Until I don't reach the point 2, nothing to do for the moment. Even we expect the rate, the unemployment rate this afternoon. So in this case, I let it go for the moment. Okay, there are no more trading ideas for the moment, guys. I want to say again, thank you. And by the way, if you want to see more than on the YouTube video, you can subscribe it in the right corner. And below that video, you will find a lot of links. All of them will lead you to the homepage of Admirals. They will find a lot of information about our trading ideas there, and information you need for your own trading if you want, or the next appointments, and so on. I want to say thank you for Anna for the support this week, by the way, and for all of you that you join and you share your very precious lifetime with me this week. It was a very successful week this week. We had a cool trades, and DAX is still running, and it was really a great week. And I want to say thank you, because it's not a normal thing that you spend your lifetime with me, this guy from Germany, and therefore great thank you. I wish you a wonderful Friday. I wish you a great week. And now, guess it's time to stand up, go to your beloved ones, give them a hug, and say those guys, I love you, because this is what is important in our life. Have courage and be kind, and may the forest of the rules be with you.